Welcome back to Trades and Gains, everybody. I'm your host, Max Pitts, and Intel just beat earnings, but the stock dropped. But wait, let me explain because there's more. Let's talk about first, though, the headline beat that didn't matter. EPS was beat, revenue was beat, but the market reaction sent the stock straight down. Intel crushed Q1 expectations, but Wall Street ignored the wins. Why? Guidance, zero EPS, falling margins, all red flags for the chip maker. For guidance EPS for Q2, we're looking at $0. That's not great. That is not great at all. For the revenue range, we're looking at 11.2 billion to 12.4 billion, which falls under what they made in Q1. Doesn't make sense. That doesn't show any growth. Gross margin is falling again with 36.5% projected. They beat Q1, but the outlook was dead flat. No growth, no margin, just vibes. But unfortunately, these aren't the vibes that you're going to take to Coachella or feel good about. Now, this is what's really is happening behind the scenes. For client computing, that group is down 8%. The Foundry IFS lost $2.3 billion. Mind you, they lost $7 billion last year this time. The data center is up 8%, however, and that was the one bright spot from this report. Intel's struggling to pivot. Their chips are old, their margins are thinner, and their foundry is an absolute money pit unless a whale comes along. Now, we got our boy Lit Bhutan, and he's making some big gambles here. He's cutting 20% of the workforce. CapEx is down from 20 billion to 18 billion. They're dumping their Altera stake. That's not a good sign, by the way. And there's a mandatory return to office in September. Intel is slashing costs and hard. Layoffs, divestments, budget cuts. Will it work? Maybe, but this is all defensive. Now, this is what needs to happen now. They need to have a killer chip on 18A. A major foundry customer needs to step in to absorb some of that $2.3 billion loss. A clean win versus AMD or ARM. Profitability in IFS, again, that foundry customer is going to come into play there. And also a macro tailwind. Until Intel hits one of those, this isn't a growth stock, it's a hopium stock. But here's our closing take. Intel beat earnings, but this is not a comeback story just yet. Until they prove it with chips, clients, or margins, Wall Street won't buy it, and neither should you. Like, comment, and drop your Intel Corp price target in the chat. Bull trap or turnaround? Sound off below. I want to hear your guys' best takes. Until the next one, I'll see you all later.